Hey traders, this is Ron. Happy Wednesday. Hope you guys had a great day. As always, everything in this presentation is for educational purposes only. Taking a look at the SPY here using Thinkorswim tonight, we can see it finished up a little bit, about 10 cents or so. Overall, the markets remain in a bullish technical posture. Now, the stock I want to talk about is the mouse house. It is Disney, DIS. If I zoom in here, we can see the huge surge today, 7+%, $10+, closing near the highs of the day, new all-time highs, huge volume, but the volume started a couple days ago. Why is that important? Remember, thinking back to the last couple years, I brought in my other company, Financial, and I told you guys that, hey, Disney is one of the most seasonal stocks out there, publicly traded 40 plus years, 46 years, and the ebb and flow to this stock is incredible. Does it work every year? No, nothing ever works every single year at the same time. But what if I told you that this stock, depending when you want it to look, 76, 78% of the time it rises by 11% over the next 14 weeks. Or if we go out even further, we can see it gets as high as 80% over the next 26 weeks, rising by an average of 17%. There is a clear ebb and flow to Disney. Usually Q4 and Q1, part of Q2, very, very bullish historically. And then you get into the summer, usually May marks the high. Ironically, this year it almost did the same thing. Knowing these ebbs and flows, I believe, can be the difference between another so-so year or an amazing year. And you guys need to watch for it. I talked about it earlier. I talk about it at Financial all the time. And what happened? There is a Q1 positive, or I'm sorry, there is a positive earnings reaction to that Q3, which is now into Q4 report. Look at the volume start to tick up right in front of earnings. Here the stock closes above the 50-day. The very next day it's up here. Another earning. This was the earnings pop, consolidates for 2 days, and then the big massive move today. But if you knew walking in that this company had a positive earnings report, think of the possibilities. It's pretty incredible. Go back and look at the last 2 or 3 years and watch how the volume surges as it comes into that earnings report in November. It's incredible. For example, even if you got in before earnings, check this out. That's on 11/7. If I go to the Analyze tab, we change the calendar to November 7th, and we go out to March. Just using an at-the-money option at strike 135, it costs $6.95. This is the day before earnings. Even if you try to jump in early, knowing how the traders typically react to that report, let's say you paid $7. If you take that to today, that 135 is now worth 15. Over 100% return, right? Every 700 turned into 1500. Yeah, that's not bad for a couple days work. What if you waited till after earnings? Let's say it was 11/8. Go back here, think back, go to 11/8. The stock's at 137, 138. Let's say we go strike 140 right at the money. It's about 6.25. Note the bigger bid-ask spreads too. Once the market would open, this would become narrower, is most likely. Let's just say we pay 6.25. We actually overpay for this option. Paid 6.25 for strike 140. Go to today, it's now worth 11.30. That's almost a double. And there was plenty of opportunity. Even after earnings, the stock actually dipped, but it got a cheaper option than the explosion today. At this point, the 20-day EMA is end of day trailing stop. Here's what I want to do. I'm going to check my schedule next week. I was going to wait to do an event closer to the end of the month, but I'm already getting comments on this Disney. I'm going to show you the top 10 hottest stocks for year end. So keep your eye out for the invite. It's probably going to hit your inboxes maybe over the weekend, and early next week we'll get together, or midweek, and we'll do another one of these events. You've got to know when the big money typically pours in and pulls out of stocks. And if you're saying, well, that was the Disney Plus news, that was specific, go back and look at Disney's chart the last couple of years, and you're going to see that, oh my goodness, this quarterly report usually has a positive reaction, and then there it goes. So again, keep your eye out for those emails. Now, let's go back to some other stocks. CSCO. This was a stock that we've been watching because support's down here, resistance up here. Let's see which way it goes. Well, if I pop open my panel here and I type CSCO, we can see it's down about $2.50. So it's going to open up right around here at support if this is where it closes tonight. We need to get above 50 for it to be bullish. Below 46, your target's down here. How about this stock, GOOS? Goose got goosed. Stock lost 10%, target back down there to those June lows, which isn't that far away, maybe another 5% lower, but definitely bearish. Huge volume today. How about KHC? Remember we're following Kraft Heinz? We had that big earnings surge right here. I said I wanted to get above some of these highs. Just give me something to show that it's not a one-day hit wonder. If I zoom in a little closer, look what's happening. We're starting to get above it. We consolidate, and now we get a pop higher again. At this point, I would say the technical target's about 36 bucks. That's almost 10% higher. Then there's a huge gap fill to 48. Doesn't mean it's going to get there in a day or two or a week. It's probably going to be a longer process. But I think the turnaround technically has begun for KHC. I had a question on gold and the hammer today, or yesterday. Yes, that does look like a hammer if I zoom in closer. I get it. But what I like to see in terms of hammers is vicious sell-offs, violent sell-offs, and then you get the hammer and then a hard reversal. You're getting that little hammer right there near a previous support area or on top of a previous resistance level. We don't want to see that typically. To have more of a true reversal, you want to see big plunges, and those reversals occur nowhere near support. So it's more like a capitulation type move. That is not the case with GLD. There was not huge volume yesterday either. So don't fall for that hammer-esque like candle. And two other stocks to keep an eye on. One is Clovis, CLVS. Send you home with these two. Stock was at 30 February. Now it's at 2.3. Starting to rise. It's up to 6, just like that. We popped above on earnings, the 50-day consolidated. Today we jumped another almost 20% higher. At this stage, pretty much the gap fill around 8 something, maybe 30, 40% higher, and then up to 10. And TVTY, check this one out. Stock gapped lower and then closed the highs of the day. In doing so, it basically bullish engulfed multiple days of price action, closing near the highs of the day. Target going to be 22 bucks, maybe 10 or so percent higher. But then, holy mackerel, the gap down at 33, and then it opened on the gap down at 33 in the original spot before it gapped down up at 40. So keep an eye on CLVS, TVTY. I would say on Disney, and something I'm hoping for, is we probably get a little bit of a pullback after such a big move, unless folks just weren't able to catch it today and it just gaps and goes higher tomorrow. But we get a nice little pullback. Might be an amazing opportunity, again, to follow on paper. 20-day EMA is the end-of-day trailing stop. If you're following the educational exit system that I like to teach, first call off at 20%, second call off at 100, third, let it run and see how far we can go. And as we get into the end of the year, there's more stocks that are seasonally bullish. And we start getting into January, the mother load occurs, where it's just stock after stock after stock that goes positive on a seasonal basis. So keep an eye out for that webinar. I'll send you the invite. There'll be top 10 stocks for the end of the year, and I'll also cover the new year too, because we want to be ready. A lot of folks are going to be sitting here wondering, oh, that's just because nobody knew about Disney. Actually, if you watch my videos, we all knew about Disney. This was the window when good stuff happens. The earnings report happened, it was good, and then even more goodness happened. Fortunate for those of us that knew about it, knew about the positive window. Okay, wish you guys all the best. I am back home, so we will have a video tomorrow night as well, and then of course in the weekend video. Take good care, gang, and I'll see you next time. Bye-bye.